Good day, everyone. Ali is here from Safi Financial Network. Today is November 12th, 2022. All right, so let's start with a monthly chart for Dow Jones Industrial. Just because this weekly analysis, I just want to go over all the indexes one after each other. And let's start with Dow Jones, just because Dow Jones is outperformer. If you want to compare the other three indexes with Dow Jones, especially in Nasdaq, which was a leader last 12 years for the secular bull market. Right now, in this bear market, Dow Jones is kind of leading, and there is a reason behind that. So the first reason is Dow Jones is overwhelmed with financial stocks and energy stocks. So in this situation, especially in this environment, energy stocks are roaring and soaring. And as you know, the oil price is up, and that's why like a Chevron, Exxon, Oxy, and those energy stocks are pretty good. So the reason for S&P 500 is just tagging a minus 25% or 27% at the low of the September this year is just because energy stocks are pretty good. Otherwise, S&P would be at minus 40 or something due to a sharp sell-off in the other sectors. So that's the first reason. And the second reason is Dow Jones stocks are paying dividend. So when you're worried about the good stocks like high growth stocks, and you think that they are not doing well in next 6 months or even a year or 2 years, you are going to park your money into those stocks that they are kind of like slow. They are in consumer staples and they are paying you good dividend, like a Pepsi, Coca-Cola, Lockheed Martin, and those ones. So when you are parking your money in those stocks, uh, basically you're investing in Dow Jones Industrial. And look what happened. So this is a marvelous move in October, and we have followed through so far months of November. But I think Dow Jones is reaching out to a very, very crucial or decisive moment to set up for a new bull run, or probably that's going to be a good dead cat bounce within the market. So, based on the monthly chart, we are almost breaking out the trend line, the bearish trend line, which is the first signal that everyone is looking at. So, if you just draw a line here, so from this pivot, and this pivot is a typical third touch. And right now we are just above it. But we are not at the end of the month. We are just at November 12th. So it's kind of like a halfway through, and halfway is left. And we don't know exactly if we are going to stay here for the rest of the month, or probably we are coming back down to this level. But so far, it's pretty good action from the Dow Jones. Right now, we are just hitting the SMA 20 on the monthly basis, which is very, very important. So that's going to act as a resistance, and it is very, very decisive moment for the Dow Jones. And also, based on the price action, look at this consolidation, and when it fails, on this candle. So we are going back to test this. So we have test twice, and this is the third touch. And and again, so we need to close a monthly candle above this shadow. If we close above this shadow on months of November, then the next resistance would be here at top of this consolidation. So again, we had a move already, so lots of people are getting back to the bull side. I'm kind of like okay to have a long position, but make sure that trail your stop, or make your trade risk-free, just because we had a move already in Dow Jones Industrial. And I'm starting with Dow Jones just because Dow Jones is the leader of the market, right? So let's go to weekly chart. So in weekly chart, here is the weekly chart, and look at that. So this is a nice demand area which formed here. We just break out this resistance area fantastically, like a knife, uh, like a hot knife, actually, just running through the bottom. And we're just cutting the bottom easily, breaking out to the upside. Lots of traders are putting their stop loss just because of this trend line, and they just squeezed last week. And this is a typical of the bear market rally, I would say. And here's the trend line again. So this is the top of the market in 2018, I believe, and this is a top of the market prior COVID crash. And if you just train and a trend, if you just sorry, draw this trend line as a dynamic trend line, that would be a nice metric for us. If we close above this and stay above this, not like this. So this is kind of like a fake breakout. And as you see here, doji, and then coming back down sharply, engulfing this candle signals for a downside. So we need to close above this, which we did last week, but we need to stay above it. And also the better odds for bulls is we close above this pivot, because this pivot is initiate the last low. So we need to engulf this pivot, going all the way up, engulf this and close above this shadow. However, as I said, there are lots of resistance in monthly chart, and I just want to show you pretty interesting. So this is a W pattern, and everyone is getting close to, okay, if this one triggers, we're going to the long position. So again, just be careful on these patterns, just because within this pattern, W pattern, I know it forms fantastically. This is a nice divergence between here, this and this, and also MACD confirms that one. And price action, we get to this nice consolidation area, breakout to the upside. This is another W pattern off the rally to the exhaustive move. But I'm not sure if you're getting there, just because look at the W pattern again. So if we break out something like this in W pattern, if this rally is going to be sustainable, there should be a one odd, and that rally is supposed to be very, very exhaustive. Everyone hates this rally. Look at that. This is very, very choppy and sloppy. Everyone is saying, okay, we are going back to the bear side, we are going back to the bear side, but it didn't. So it went all the way up to here, and then January, like the other indexes, coming back down. But look at this W pattern formation. So this W pattern is pretty spiky, it is pretty sharp, it is pretty fast. So this is a typical bear market rally, like the other bear market rallies in 2000, 2020, 2000 to 2002, and also 2008 to 2009. We had lots of bear market rallies, and this is not going to be the same. Well, look at that. So here is the sharp rally to the upside, and that was a weekly candle. But this is a COVID crash, and look what happened here. So again, we had a consolidation move to the upside, and this is a capitulation phase. This is a capitulation phase. So we need to see something like this. We need to see a capitulation phase. This was similar to the capitulation phase, but I'm expecting prices coming back down again, probably next year, not this year, but probably next year. We are coming back down to 24 to 25, and with sharp sell-off, like something like this parabolic move to the downside, and that would be capitulation phase, and that would be the market bottom. Right now, everyone is betting on the bottom, and I'm gonna show you in sentiment video, which is posted today. Again, so we are getting back to kind of like a euphoria phase. Everyone expecting prices coming back down is finished, and we are just going up, 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 day after day. And look at that. So stochastic fast line is getting to overbought condition, same as here, same as here. So in any bear market, when we are hitting to the top of the trend, or when we are getting to the huge resistance, when you see stochastic and all the other indicators show you we are at the top, probably if you are in the long side, just make sure that make your trade risk free, or trail your stop. Even if you don't want to take a short position, that's okay. If you are on the long side, make sure that just make it risk-free. You don't want to change your green with red. So always pay attention. Preserving your money or saving your money is going to be your first priority. All right. So again, waiting for a reversal candle, and then we can come down. So my cycle is November 14th to November 16th. I'm telling you, um, these days are going to be very, very critical. Again, November 14th to November 16th, we should see a decisive moment for the market if it wants to keep the bull run or probably the bull run is finished. So I'm gonna pay attention to that one. And going to daily chart, here's the daily chart. We are losing the momentum. It is obvious in RSI, it is obvious in MACD, it is obvious in a stochastic. The stochastic is forming a very, very sharp sell-off in momentum. Also MACD as well. So MACD, we are sliding down, and at this higher high, you see this is a lower high, and this high, this high. So we are getting to this area. And this area was pretty important in all the other indexes as well. And this pivotal point, middle of this candle, and if you want to just make it a very, very accurate, so here's the point. So Dow Jones 34,300 would be your spot probably for daily. Let's make it like this. So when we are getting to this area, I would say probably take a short position after reversal candles. So again, I'm not saying take short position now because market can stretch into late November, and some people are saying probably into December, which is okay. Still, we can't go above this candle and fake breakout and then coming back down. So Dow Jones is pretty solid, I would say. So betting, if you want to betting against Nasdaq or S&P, make sure that look at the Dow Jones. See if there is weakness in Dow Jones, then it's gonna be your golden trade. If it's not, so probably just the bounce, and we will get back to the bull run again. So, but this one, two, three, and four, and five, this I would say is going to be finished, and probably this correction has been done. Again, I'm just looking for November 14 to November 16 to see if reversal is happening. And if that reversal is happening, probably we are coming back to test this, to back test this trend line to see if we hold above it, or probably that's going to be just a dead cat bounce or bear market rally. But for now, Dow Jones had a remarkable move to the upside, and probably we are getting back to the bullish, to the reversal point uh, next week. I would say midweek to the end of the next week. That would be your case if we get back to the bearish side. Okay, so I'm going to post more videos about the Nasdaq, S&P, and sentiment later today. So make sure that watch those videos as well. If you like this video, please smash the like button. Subscribe to our channel to get more updates regularly. We have daily analysis as well. And have a good weekend. See you on the chart. Bye bye.